Welcome to Opal STV. Today I'm in Montreal together with Chris Eddy from Castle Hall, where he is CEO and founder. Castle Hall has been doing due diligence since 2006 and this year has launched DiligenceExchange, which is truly a game changer and free for investment managers who adopt this new industry standard. So Chris, let's go into this. What is DiligenceExchange? How does it work? And what are the benefits it offers to investment managers?
At Castle Hall, we believe that, especially as we emerge from COVID, due diligence has become quite inefficient, duplicative, and very costly for both asset managers and investors. Where we are at the moment is oftentimes a process whereby an asset manager looking to raise a new fund or offering funds to both existing and potential investors needs to respond to a great deal, multiple inbound requests from investors looking for their own due diligence information, requests for proposals, etc. And managers have told us that the overall degree of duplication in the core requests is very high. Indeed, oftentimes more than 2/3 of the questions that investors are asking, it's basically the same thing, albeit asked in slightly different ways. And ultimately that duplication, particularly for larger managers who may need to respond to tens, if not hundreds of inbound inquiries, it takes many, many hours from the investment relations team, and thereafter is also overall slowing down the investment process. So what DiligenceExchange does is it looks at what is the standard information that every investor and allocator needs when they are learning about conducting due diligence on an asset manager and a particular fund. It's the core questions. What is the asset management company? Who are their affiliates? Who's the fund's auditor? What's the biography of the chief compliance officer? All the standard information that everyone needs to know. Castle Hall has created an industry standard format and methodology to present that information in what we call a DiligenceExchange Transparency Report. Importantly, this is not just another DDQ format where it's a questionnaire and each asset manager fills in their responses and delivers it to the investors. Castle Hall steps in the middle to independently verify that information. We conduct a range of trust but verify checks, such as checking the appointment of service providers, checking public information to incorporating registers, other public data sources, and really step in with a range of anti-fraud checks to confirm that the information provided by each asset manager is valid, bona fide, and correct. And ultimately, probably the best element of the process that we can offer is that it is free of charge. So for the asset managers, there is no charge to prepare a DiligenceExchange Transparency Report, and then that can be accessed by both current and prospective investors equally free of charge using our Diligence Hub online diligence platform.
So Chris, for investment managers, can you give us a summary of the benefits that he or she would get through joining DiligenceExchange?
Well, in terms of benefits, we've come up with a list of 7 key reasons why we think that it is very beneficial for asset managers to participate in the DiligenceExchange Transparency Initiative. And number 1, as I just mentioned, is that it's free. We certainly feel that from a cost perspective, this has an appealing price point for both asset managers as well as investors and allocators. The second issue is really the workload of your investor relations team. How much time are you spending completing the multiple inbound DDQs and RFPs that current and potential investors are sending? How much duplication is there and how much time could be saved with a standard report being delivered? And then, of course, the ability to really focus in on exceptions, additional questions that are material to each investor and really are moving the needle with their overall investment decision-making process. 3, it's independently verified. So this is checked by Castle Hall. And Castle Hall is providing that confirmation that the information that you provide is bona fide, is genuine, and we're delivering a range of anti-fraud checks. You're not lying with respect to your representations around your prime broker, your directors, your administrator, etc. Fourth, especially as we emerge from COVID, we think everyone is focused on transparency and best practices. A commitment from asset managers to really be moving forward to meet the expectations of institutional asset owners who are looking for a degree of governance, risk and compliance, conformity and sophistication. Transparency, best practices really is a key driver to differentiate a firm and make it appealing to the asset owner community. 5, we are really pleased with the adoption of DiligenceExchange since launch. There are now asset managers with total assets in excess of $10 trillion in assets under management, trillion, not billion, who've already adopted the DiligenceExchange standard. And that really is, in our mind, showing the appetite for a tool that unblocks this inefficiency and really provides a way of moving past the inherent time that is being spent responding to a very duplicative and inefficient process at the moment. 6, there is already a significant installed user group in that every DiligenceExchange Transparency Report is immediately visible to Castle Hall's 200 plus existing investor clients. Once a transparency report is issued, it is visible on our Diligence Hub platform, and all of those global institutional investors have access to that report and can be in a position to learn more about your firm and funds. And ultimately, this comes back down to how can we all come together to use technology and get a FinTech approach that brings efficiency and speeds up the allocation process. Asset owners want to identify great managers and get their capital to work as quickly as possible. And equally as asset managers, we all want to work through the due diligence process, the discovery process of learning more about the strategy and equally covering off the ODD side as rapidly, as efficiently as possible. We think that DiligenceExchange really moves the needle to help capital get to work far more quickly.
Now, Chris, tell me, how does it work? If I, as an investment manager, want to participate in DiligenceExchange, what do I have to do? What are the steps?
Well, we've done a lot of things to make the process as easy as possible. So first of all, we will provide our own data gathering questionnaire and document request list to gather the information that sits within each DiligenceExchange Transparency Report. Importantly, if Castle Hall has already been engaged by one of those 200 plus investor clients to complete due diligence on your firm and funds, we already have the data, as that is part of our standard due diligence process when we are working for an investor who uses Castle Hall to support their ODD. Once we've gathered the data, we then proceed to complete a range of trust but verify checks. So we'll be reaching out to your prime broker, your administrator, your directors, your compliance consultant, as well as completing a range of public verification checks to, for example, incorporating jurisdictions, sanctions lists, and similar sources. Once our report is complete, you have an opportunity to review that report, to look at the data, look at the verifications, and of course verify and validate that the information that we have accumulated is correct and accurate. And once the report is finalized, you are then able to distribute that report to current and potential investors. And that can work two ways. First of all, the report is available on Diligence Hub, so our client users can go to your landing page, your manager homepage, and click to request that document. Alternatively, we provide a web link whereby you're able to send a communique to your current and potential investors, either en masse or individually, to say that a report is available. On clicking that link, the user creates a Castle Hall account and then goes directly to your DiligenceExchange Transparency Report. But one important thing here is that this is confidential information. So every asset manager that participates in DiligenceExchange has full control over access and which investors are able to see information on the platform. Essentially, we've adopted a process similar to LinkedIn. So every investor who is interested in learning more about your firm and fund raises a connection request that is then approved in your manager control center. So this is not a consultant style database whereby once information is contributed, that can be distributed without limitation to many investors and potentially your competitors without your knowledge or control. No user is able to access information unless you provide your individual permission. And that means, of course, that you are aware of every investor who has expressed interest in learning more about your firm and funds.
And also, Chris, I wonder, what information exactly are you covering with your transparency reports at DiligenceExchange?
Well, I have to say we don't necessarily have any prizes for originality in the way that we build the scope of our due diligence process. But what Castle Hall has done is take the underlying scope and methodology that we apply in our flagship ops review due diligence and look at the same core data points that we can then apply to DiligenceExchange. So this is entirely consistent and comparable to the due diligence process that we have applied for our client base since inception, working across, again, several thousand funds during our tenure as a diligence practitioner. We look at three main areas, which is the business risk of the management company, the legal risk of the fund entity, and then the operational risk of the control environment. So with respect to the management company, we're looking at the structure of the firm itself, its ownership, product range and assets under management, insider investment, human resources, and key elements around how the management company is structured and operated. We separately look at the key elements of regulation and compliance, and then, of course, information technology, looking at the IT infrastructure, as well as, of course, cybersecurity controls and procedures. At the fund level, we're providing a range of information to investors to understand the fund structure. Where is the fund domiciled? Is there a master fund, underlying SPVs or AIVs? What are the key terms around allocation, redemption, or contribution and distribution if we are in a private equity structure? And we do have differing formats for open-ended versus closed-end funds, as you would imagine. We focus in on the fees and expenses, as well as issues such as corporate governance when we are in a corporate hedge fund structure. And with respect to the control environment, again, we're looking at the core controls and core information that every investor needs to know when they are conducting the due diligence on a particular fund or account. What are the asset controls? Who are the prime brokers, custodians, and counterparties that provide services to support the execution of the strategy? How are wire transfer controls and asset transfers organized, signatory issues, etc.? With respect to trading controls, we're asking questions around trading and execution systems, providing a trade flow diagram around authorization, execution, settlement, and confirmation. We look at the valuation procedures, noting the level 1, 2, 3 allocations, noting if there is a third-party valuation services provider, etc. And finally, look at reporting controls around the net asset value and financial statements. And indeed, with respect to the audited accounts, We also input the current and prior year financial statements when available to allow the investors to have immediate access to information from the audit to look at the balance sheet, the income statement, and keynote disclosures. Overall, it's a pretty comprehensive summation of core reference data that is very usable and relevant to every investor's due diligence process. And of course, the key point here is it does take time to produce this information, and there is time required for you to furnish information to Castle Hall, review our draft report, make sure that we've got everything right. But once it's done once, this same information can then be distributed without limitation to your current investors as well as potential investors. The idea here really is to create that industry standard that then can be used as a core tool which has wide acceptance across the investor community.
So Chris, I think it's obvious this massive aggregation of data and analytics that you are providing for managers and investment managers. I think that must be tremendously useful, isn't it?
Exactly. The last part of the puzzle are our DiligenceExchange benchmarks. And what Castle Hall has built is a FinTech algorithm. And once we've gathered the data on an asset manager and a fund entity, we run that algorithm which identifies a range of risk factors, risk analytics across the management company and fund entity. And in total, we cover about 250 different risk factors. And for our paying DiligenceExchange investor clients, they receive the analytics in their DiligenceExchange subscription that allows them to see which risk factors have been triggered for a particular fund, how that rolls up to their portfolio, and then compare to our aggregate industry benchmark. So for the investors, their benefit of DiligenceExchange is to be able to say, well, how many of my funds have had a cybersecurity breach over the past year? How many of my funds do not employ a third-party valuation agent? How many of my managers have key person dependency or nepotism within the management company, for example? And again, there are about 250 different risk factors that sit within the platform. Now, to clarify, the risk analytics are not present in the free transparency report that you would distribute to investors. This is the benefit of an upgrade for our clients who elect to become paying premium members of DiligenceExchange. But for the asset manager, there's really two things here. First of all, in the spirit of partnership and transparency, we want to provide to each asset manager the transparency of the risk factors and analytics that have been triggered. Obviously, we think it would be very unfair if a manager agrees to participate in DiligenceExchange, provide a transparency report, but Castle Hall then runs an algorithm, identifies risks, and doesn't give an asset manager the chance to have sight of those factors, be aware of them, and potentially make changes to their business practices over time. And that links to the second element of the diligence process by providing a diagnostic to each asset manager who participates in DiligenceExchange. We are able to provide an overall summary of, well, what risk factors were triggered for your organization, and how does that compare to our industry benchmark, which is now at around 2,500 different fund entities. So this allows you to calibrate your firm against your competitors with respect to potential risks or characteristics that our algorithm has flagged, and equally be able to drill down to any of those 250 factors and look in to say, well, generally across the industry, how many asset managers do X? And this ultimately circles back to the real point here, which is transparency. We think that as the industry moves forward in the 2020s, the days of hedge funds and private equity being a secret club of opaque individual discussions, we can become more institutional, we can become more sophisticated, and we can bring more transparency. And we feel that the DiligenceExchange benchmarks really are the final piece of the puzzle that allows both investors and asset managers to have a much more informed view of best practice, of industry behavior, and again, make their investment decisions much more quick and efficient.
So Chris, really congratulations on your DiligenceExchange. I think it's a tremendous exercise. It makes total sense. And thinking about it, I think that over time, it really has the potential to materially improve and upgrade the way how the entire alternative investment industry operates, doesn't it?
We really hope so. Castle Hall, we've been working for 15 plus years doing due diligence. We have now nearly 100 people around the world. And as we work with investors, we're trying to help drive better outcomes in the investment management industry. There is some incredibly skilled people working for asset managers, very knowledgeable and skilled people working for allocators. And the allocators themselves may be working on behalf of hundreds of thousands, if not millions of end pensioners. Our industry touches a huge swathe of the financial services sector. Yet unfortunately, we just continue to fight against this reputation. We continue to fight against the bad apples. When there is the manager who commits fraud, there is the manager who commits steals from their lending agent, all of these issues that come along. What we're doing with DiligenceExchange is really to drive better practices. So on the first hand, the anti-fraud verification element within DiligenceExchange really is a material improvement to verify that diligence information is correct. It's not simply something that's been provided by an asset manager without an independent confirmation. Again, if I ask a thief whether they are a thief, they are unlikely to give me an honest answer. It needs to be checked. And we're doing that at Castle Hall. And secondly, the question of transparency and benchmarks. We all want to know what is best practice, what works best for your business, what is most efficient, and equally, what is the standard practice and behavior across the industry, what do institutional investors expect and indeed in some instances require if they are going to make a material allocation to your firm and fund. I think the more that we can come together as a consortium of allocators and managers, almost a community of allocators and managers, we can coalesce around a standard suite of information, really get buy-in and agreement that this is the core that we need when we're completing due diligence, and leverage that to help expedite the process and again generate better investment outcomes for all sides.